All right, ladies and gentlemen, we are coming live from our Joburg office. Good morning. Welcome back to the opening bell with myself, Tshepo and Ashley, and this is brought to you by TD Markets and TD Markets Academy every Mondays to Fridays at 9, streaming live on YouTube. We're going to get straight into it, guys. Today is the day the Fed decides, all right? This week is a week that is filled with interest rates decisions, and today is the day that we've been waiting for. The FOMC is holding their meeting from yesterday to today. It's a 2-day meeting, the 17th of March to the 18th of March. This is where the FOMC will decide on the policy, will decide on interest rates, right? As you guys can see, I've got the website, I've got the calendar here, right? We're not going to look at the charts today. We're going to talk about interest rates, U.S. interest rates. But before we get at 2:30, we've got the PPI, the core PPI, another important report from the U.S. We also have at 3:45, we've got the BOC, the Bank of Canada interest rates decision. The press conference follows after that. And then at 8 p.m. South African time, we have the interest rates, the U.S. interest rates announcement. 30 minutes after that, we've got the press conference. It's important that you also listen to the press conference. You watch the press conference, all right? So the Fed decides what to expect. What is it that we know? Let's talk about this, and maybe you guys can use this to just plan around maybe your positions, all right? So we're looking at two things here. We're looking at the jobs report that was released on the 6th of March. We are looking at the inflation report that was released on the 11th of the 12th of March, all right? Now, starting with the jobs report. Now, the payrolls unexpectedly fell by 92,000 jobs. So in the month of February, the U.S. lost 92,000 jobs, all right? And unemployment rate rose to 4.4% from 4.3%. Some weakness was temporary, but it still signaled a clear softening in the labor market. So what that means is that the immediate reaction from this is traders pulled towards the expected timing of the next Fed rate cut. Remember, last year, the beginning of this year, we've been talking about how this year is the cutting season. A lot of central banks are looking to cut and so forth and so on. But then a bomb happened. The Middle East tension, the war between the U.S. and Iran happened. And so it affected a lot of things. It shifted a lot of things, right? So due to that, the Fed now that is going to be one of the main drivers to the Fed's decision, all right? So now expectations is that rates will, or rather the Fed is going to cut rates later on in the year. We were expecting the rates to be cut in the next meeting, this meeting, but due to what has happened, the Middle East tension, the jobs report, the inflation data, expectations is that cuts are going to happen later this year, right? Around maybe July, September. And then you look at the CPI inflation report, which some may argue it was weak, some may argue it was moderate, but we know that the headline CPI rose to 0.3% year on year, and then the core CPI was plus 0.2%. And then the yearly CPI is still on 2.4%. Now, it's way above the target. The target is 2%, all right? So the reaction there is that, inflation still remains above the Fed's 2%. So it reinforces caution. Markets don't really price in aggressive easing, so to say, all right? And then you've got the combined effect, or rather the oil price. You've got the oil price, right? The weak jobs data gave a dovish tilt, but sticky inflation plus energy cost risks created a strong hawkish counterweight. So there are two sides here, right? The jobs report, gave us a dovish tilt, while the energy cost inflation gave us a hawkish tilt. So it's unbalanced, right? So with that being said, this is what you're expecting now from the FOMC, right? There's a 90% chance that the Fed is going to hold rates. At the moment, rates are 3.7%. There's a 90% chance that the rates will be kept steady, right? No cut is expected this month or next month. The next cut is expected for July, right? So it could be earlier than that, could be a bit later than that, but at least for July, with many forecasts showing 125 basis point cut or even zero, right? So that's basically the update, right, to look at. So yeah, so in a nutshell, guys, just to summarize everything here, in a nutshell, interest rates, the markets are looking at the interest rates, and no cuts are expected. So markets are expecting the rates to be kept the same due to what has happened for the past 2 months, right? Not only the Middle East tension, but the economic indicators that came out. So it's going to be interesting. Let's see how the markets will react. We'll look at the charts after the reaction, all right? So like I said, the interest rates will be announced at 8 p.m. South African time, and then the press conference at 8:30. You can catch the press conference on YouTube. Just go to Bloomberg on YouTube, or just type in US Fed. Just search press conference, FOMC press conference on YouTube, and then it will stream live. All right, that's where you can catch it. So 8:30, that is the time. So ladies and gentlemen, let's see what's going to happen. Looking forward to tonight. Let's see what's going to happen, and then we'll talk more when the interest rates are out. All right. So that's it from us, guys. Good luck. Have a good day. Enjoy. We'll catch you guys tomorrow.